Okay, welcome everyone. Jason here from Alliance Corp. I've got a great video here for you. The big question is it a good time to buy? So a lot of clients are asking us this question at the moment, mainly because the market's changing. All right, if you've read in the papers or you've been following the market, it's going through a bit of a correction at the moment in some areas. So the question is, what do you do? Do you buy? Do you wait? Do you maybe sell a property? I can tell you now, your decision moving forward should be based on credible information. And unfortunately, a lot of our decisions can be based on what we hear in the media, what we read, what we watch on television. Now, you've got to be very careful with this, guys, because this is simply sensationalism. You cannot listen to the media unless it's a credible source. The only way these guys make money is through advertising. They need to grab your attention. Have I got your attention? All right? So let's have a look at how that works in action. Have a look at the image that we have here. Wow, this woman almost died in a plane crash. There you can see it. It's on fire, going down in a ball of flames. How does she possibly survive that? I want to know about that. But if you click on that and read the article, you know what happened? She simply was sitting there and went through a little bit of turbulence in the plane. But that was the image she used to get your attention, and she probably had some advertising running in the background. So guys, this is what the media do. It's either in the headlines or it's in their images. Let's again have another look at an example of how this works in action. If you have a look at the graph now, what you'll actually see is that back in 2010, Steve Keen, an economist there, did a bet with the Macquarie Bank analyst, Rory Robinson, saying that prices would fall by 40%. Now, what did they do over the next few years? They jumped by 37%. So again, if you're putting off buying a property or you actually sold a property, it would have cost you hundreds of thousands of dollars. Again, Harry Dent, an Australian author there, in 2014 was saying that prices would fall by 27%, and again, they jumped 23%. 2016, 60 Minutes jumped on the bandwagon, and again, they love these stories. They talked about how the market would drop again by 40%. They had Jonathan Tepper on there talking about that. And again, what happened? The market grew by 15%. And if you had a watch recently, again, they went back 60 Minutes, did the same thing with some commentators saying the market was going to drop. And again, those commentators made some statements the following days to say that 60 Minutes only focused on their doomsday predictions, and it wasn't a true reflection of what they said. So again, guys, don't get fooled by this stuff, right? Because it's going to cost you a fortune. Okay, but you need to understand what's happening. So let's talk about what's happening in the market today. The reality is that we're just going through a normal cycle. All right, it's perfectly normal. But you won't read about the papers because that's boring. All the papers or the TV, all they want to talk about is doom, gloom, or boom. Okay, they don't want to say, oh, look, this is just normal part of our property cycle. And as you can see here, let's have a look at the graph in terms of how that works. So this is Heron Toll White. They're the national valuation company. So they've got a pretty good idea of what's happening in the market. The way our cycles, the property cycles work, is we refer to this as what we call a property clock. So you can see there at the top, the market is peaking. So that's when the market is at the top. That's where you've got the most amount of demand. That's where you can see a lot of frenzy buying going on in the market, really pushing up prices. Then the market needs to take a breather, all right? So then it usually pulls back. It can sometimes correct itself. It can sometimes, the prices can come back slightly. Then it tends to sit flat for a while, and then you sort of sit at the bottom of the market for a little while. And then over time, the market then recovers. You get some more demand coming back into the market, and then start to push up prices again. So in your major capital cities, you can go through one of these cycles on average roughly every 8 to 10 years. In the regional areas, it can stretch out to maybe 12 to 15. So it's not a big deal, guys. You can see there that Sydney's sitting at 1 o'clock because it's in a little bit of correction. It's taking a bit of a breather. Melbourne, they've got Melbourne at close to 12, but it's probably more so around that 12 o'clock. At the moment, because that graph was back from March earlier this year. But it's a normal part of the cycle. It's nothing that you need to get stressed about. So now let's have a look at how that translates into the actual growth on your properties. So you can see here, going back to 1978, you can see the average median price of properties here in Australia. Again, this is from BIS Oxford Economics. And you can see there the median price, it fluctuates. All right, but there's been no significant crashes or significant downturns. They're just corrections in the market, guys. You can't expect to buy a property and expect it to grow each and every year. There's going to be periods where the market's flat. There's going to be periods where your property might even drop back a little bit, but it's not a big deal because even if your property dropped back a little bit, the banks don't call you up. They don't say, look, we know your property's worth a little bit less, you've got to sell it. It doesn't affect your cash flows on the property because your rents and yields and everything is still the same. So as you can see there, over time, you'll just go through these periods where your properties do very well, and then you'll have periods where the properties might sit a little bit flat. It's not a big deal. The next thing I'm going to draw your attention to is to have a look at what drives these markets. Okay, so why do we get these booms and flat periods and troughs, etc.? Simply two things: supply and demand. All right, so at a very high level, what's driving demand? It's population, it's jobs, employment, it's the economy, it's infrastructure projects, it's affordability, what are interest rates doing, etc. Then the other part of the equation is what is the supply. So you might have all this demand moving into a location, but what is that location doing in terms of being able to provide enough dwellings? Is there enough dwellings there? Is there a lot of construction going on? Can they meet that demand? If they can't meet the demand, well then obviously property prices are forced up. So when we have a look at this data, if you have a look at the graph now, as you can see from this graph, again, this is from BIS Oxford Economics. They're one of the big leading research companies, not just here in Australia, but across the world. These guys know what they're talking about, right? So if you want a credible resource, here it is. And what they're saying over the next few years is, yes, Sydney's pulled back a bit. We're not getting that same level of growth that we've experienced in the last few years. Melbourne's doing a little bit better, but it's pulled back also. Brisbane is okay, 12 to 14%. Then you've got Adelaide, Perth that's in recovery at the moment, and Hobart, and then you've got a few of the other states there. So my point being, guys, is there's still opportunities there, right? And these are leading research companies that are making these claims. So the other thing I want you to consider is that even though, for example, in that graph, if you take Brisbane, for example, we're talking about 12 to 14%, that doesn't mean that you can't achieve better returns than that, okay? Because there are markets within markets. So, for example, a good example of that is Perth. If you have a look at the map now for Perth, what you'll notice is that within these pockets of Perth, you can see there the top right-hand corner, West Perth, 16%, Applecross 32%, North Fremantle 21%. So these locations have done incredibly well. But if you actually look at the growth for Perth itself, it's at 0%. All right, it's actually at 0%. Now, it was in the negative going back a couple of years, but now it's in recovery. So now it's starting to come back and it will move into the positive as per the graph that we just saw earlier. But even within Perth itself and within other states, there are still pockets that are doing really well. Okay guys, let's have a look at some suburbs closer to home. So this is Melbourne, the last 12 months. Armidale, drop of 17%. South Melbourne, drop of 11%. Canterbury, a drop of another 10 to 11%. So it just sounds like doom and gloom, doesn't it? But hang on a minute, let's look at some other suburbs around Melbourne. Last 12 months, Middle Park, 21% growth. Melton, 20% growth. Cranbourne North, just down there in the southeast, these growth corridors, 19%. So guys, again, it just highlights there's markets within markets, and you don't want to be fooled by what you read in the papers or you watch on telly. Whether it's opportunities locally or opportunities in other states, there's always opportunities out there for you to grow your portfolio. So it's up to you. You can either use all the hype and the negative media out there as an excuse not to do anything and sit on your hands, which I can tell you now can cost you a fortune, or you can have a think about the reality of what's taking place. Think about going back to 1970. Where we had 11 prime ministers, 3 financial reforms, 2 recessions, the GFC, and 4 major property corrections. And yet, how has this really affected you? Has the sky fallen in? What's really changed? For many of you, not a lot. So if you've liked the information on this video and you want more, and you want something that's more tailored towards your circumstances, I can offer you 30 exclusive property tailored wealth sessions for yourself. Now, I normally don't do these throughout the year because I don't have the time to do them, but we're coming up to Christmas, so I've got 30 available spots for you. Normally they're valued at $495, and along with my senior property coach, I'm going to sit with you and I'm going to put together a tailored property wealth plan. So what we're going to do in this session is we're going to have a look at some of your financial goals. So we'll go into a little bit more detail. We'll talk about the different types of properties that are suited towards your financial goals. We'll look at the tax minimisation, and we'll put together a strategy for you. This is a property wealth plan tailored towards your circumstances. It goes for 90 minutes, as I mentioned, usually $495, but absolutely complimentary to yourself as a special offer closing out the year 2018. So what a great offer, guys, but these aren't going to be around for long. So whether you want to pay off your home sooner, whether you're looking at a retirement strategy, whether you want access to some cash flow positive properties, we can help you with all that through this tailored property wealth session. So just make sure you click on the button below because we've only got 30 sessions there for you. I look forward to catching up with you soon, and I look forward to helping you build a fantastic property portfolio. Thank you.